Hello everyone. Let's talk about what glove shares teach us, and we will take top glove as an example. Statement: the main purpose of this course is to learn the methods and techniques of share investment. It does not constitute any recommendations or trading tips. Any risk or profit is irrelevant to the company and myself. Trade at your own risk. So for our content, there will be 4 parts. The first part is about what glove counters teach us. Take 711 trade as an example. Second part is about mid-term investment strategy of glove counters. And the third part is short-term investment strategy of glove counters. And the fourth part is about an individual share, 0208 Green Tech. Can we still hold it? So let's talk about the first part. What glove counters teach us. Here is a chart about retailers' mindset in the market. And you can see when the price is rising and the people will reach irrational excitement, which means high risk this area, but investors, they are excited. Okay, and then let's see when price starts to fall, and people will have different reaction. And when people are frustrated and depressed, here will be a bottom area, and then the market will rise again. So around this area, usually, especially when near this high risk area, investors will feel that I'm confident in this investment. And when the price just starts to fall, they will tell themselves, I just want to buy the bottom. I'm a long-term investor. And around this bottom area, some investors will say, I just want to give up stocks because I'm not suitable for investment. And then when the price starts to rise again, they will say, how can the stock market rise? It must be fake rise. I don't believe. I still want to see. So this is how retailers usually react in share market. And let's see how people react when facing 7113 top glove. When the price is rising and they say, the price is rising and let's watch the market. I still want to watch to make a confirmation. And then the market is still rising and they will say, I want to wait for it to fall and then buy. But they're waiting and waiting, but the price never falls, and then price reaches here. So now they say, oh, I can't wait anymore. If I wait any longer, I won't be able to buy it. Price, it will be much higher. So they will buy here, and they say, fortunately, I bought. And then after they buy it, we can see the price starts to fall, and almost every day the candlestick is in red color, which means the price falls. So when the price of top glove fell too fast, they will be very confused. They will ask themselves, what should I do? And then the price rise again for 3 days, and they say, fortunately, I have been holding it, and it will definitely rise again. So maybe some person will add their portion around here when the price is rising. But the price falls again, and they will say, oh, it's over. The glove stocks have fallen too fast. The bankers, they must have gone. But after maybe some person they cut loss, or maybe they feel frustrated about the share, and then the price starts to rise, and then they will say, can it go up? Just let me see. I still want to see. I just want to see. Okay, and then yesterday and the day before yesterday, they see these 2 candlesticks, and they become excited again, so they rush in. They buy this stock in a hurry, and we know today the price starts to fall, and then they will repeat here. I mean the mindset. They will think, oh, it fell too fast. I just bought yesterday and it fell today. So what I should do? And if the price keep falling, they will think, oh, it's over. The bankers must have gone. And if price rise, they will say, oh, I wanted to reach the previous high point. So we can see in this area, in this chart, our mood, our mindset is very subjective. And if we want to make it objective, we need to just put it in an object. For example, the candlestick, the chart. Because candlestick just record the trading price, the price every day, the close, open, high, and the low price. So this is objective. And if we put our mindset in a candlestick chart, we will find, okay, actually when the price starts to rise, we just want to watch, right? We can see, we just want to watch. Let's watch. Okay, I want to wait. And when a stock in a top area, and the people usually be very active around this area, so this is actually a problem. So who still remember our investment strategy we just mentioned several days ago? Midterm investment strategy of graph counters. So in share market, we know there will be trend, and the trend doesn't equal to price. For example, there are three kinds of trends. The first is sideways. When price moves up and down, here will be a high point and a low point. And if the high point is getting higher, the low point is getting lower. Or the high point is getting lower. The low point is getting higher. And we call these two situations sideways, because we can see the central point of the price is horizontal, not upward or downward. Okay, and let's see what is uptrend. If the high point is getting higher and low point is getting higher, and we can find the central point of price is upward and down, but the direction is upward, so this is uptrend. What is downtrend? If high point of this price is getting lower and the low point of the price is getting lower as well, and we say this is downtrend. So if we want to judge about trend, especially we want to judge about upward trend, we need to use an indicator called trend expert. So we can see in this indicator, here is a red or purple line. Here is a purple line, and it stands for midterm uptrend. Here will be some columns, red color, green color, red color, green color, and the red column stands for short-term uptrend. Green column stands for short-term downtrend. So if we want to find the turning point of trend, we need to focus the point that color changes. For example, like here, from green to red, which means the trend is from downward to be upward. Okay, and this point is a turning point of trend because color changes. So from this point, we know short-term downtrend forms. What about this point? Is here a turning point? No, because it's from red to red. The color doesn't change. So this point is not a trend turning point. What about this point? This is also not a changing point because our color doesn't change. So this is how we judge about the turning point, and usually when the uptrend forms, we can entry, and when the downward trend forms, we can exit. So this is Top Glove weekly chart. In Trend Expert, we can find this point is a trend turning point, and the date is the 2nd October, and the open price and the close price you can see here. So this point, weekly chart, so this week is actually forms an uptrend, which means if you do midterm you can entry, and then it's in red color, which means the share is still in uptrend. Okay, so if we see the original candlestick, we can see here is a previous high point, and it's very near current price. So we know previous high point is an important pressure resistance, and how to handle the relationship between previous high point and the trend. Because trend is upward, which means the share has an expectation to be rise, to be upward, to rise again. But if there is a resistance, how we handle it? So let's see trend development, and let's see how to make our investment strategy. First, uptrend will form, and then uptrend momentum will increase. How to see the uptrend momentum? We can see this chart. For example, if we see the column, we find the red column sometimes is getting larger, sometimes it's getting smaller. It's getting larger, it's getting smaller. So when the red columns are larger, so the upward momentum is increasing. If the red column is getting smaller, which means short-term upward momentum is weaker. Okay, so let's see here. So then the upward momentum will increase after forming, and then when the trend just meet the pressure, and the upward momentum will decrease. And if price goes down, and then the downward trend will form. So how we make our investment strategy? First, when uptrend forms, of course we can entry. And then when upward momentum increases, which means after the price moving up and down, you can make some profits. So now you have the right to choose whether you want to stop profits, or how much percentage you want to stop your profits. This is very flexible. It's your choice. It's your right, because you are making money now. And then the price will meet pressure. So if the price meets pressure, actually you still have the right to choose, because you are still making money. So you need to choose whether you want to take profit or not. Actually, whether you want to take profit or not is not important. What is more important? It should be how you handle the opposite situation. For example, if I don't believe the price will rise again, so I take profit here. Okay, then the price goes up. So how should I do? So this is more important. Of course, if price goes up again, which means the pressure now becomes support. So I can find the uptrend formation point to entry again. And if I think if when price meets the pressure, and I think okay, the stock will be very strong, the stock will break through the pressure, I believe so, then you can choose to hold. But if the price goes down and then the downward trend forms, of course you need to exit. No matter how much you believe, how hard you believe the share will rise, but in short term you should avoid the risk. And then if price keeps falling, then you can choose to stop loss, and if you don't stop loss, you may be trapped. So this is how we make our investment strategy. Let's see 7113 top graph. First, here, right, this is an entry point because upward trend forms here from green color to red color. And then after two weeks, okay, after 2 weeks movement, now you make some money. So now you have the right to choose whether you want to take profits. Okay, and then if in the future the price just near the previous, you can choose whether you want to take profit, just like we mentioned. And if after you take profit and then the price falls, here will be downward exit point, downtrend exit point. So you still can see. If you do not sell around the pressure, you can exit at exit point. And if price keeps falling, you can choose to stop loss. And if you don't, then be trapped. Okay, so this is how we invest the top graph in midterm. And then it's a short-term investment strategy of graph counters. We have mentioned before that just as a reference that you can take 30-minute chart as a reference. So for example, if you see 30-minute chart, because in our live software there will be 15-minute chart, 5-minute chart, even 1-minute chart. So you can see smaller period. But if you see 30-minute chart, okay, then let us see the charts together. So the indicators usage is the same, green to red and red to green. So we can see here it's a green to red, and the time, you can see the time here on Monday, and the close price of this turning candlestick is here. And then when you sell, this is the time, red to green, okay, and this is the price. And then green to red, this is the time, this is the price, you need to entry again. Until this morning from 9 a.m. to 9:30, and this is the close price. If you see, if when the share opens, when the market opens, and then you see it's green, okay, you can choose to leave. But if you just decide when it closes, you will leave around this price. And in the noon, we can see from 12 p.m. to 12:30 p.m. Here is a green to red, and the price is around here, and the current price is 9.36. It doesn't rise too much, and so this is first. If we see 30-minute chart, do we lose money? No, we don't lose money, right? And the second is, if you want to be more accurate, you can use another indicator. It's called MCD. So actually, if we talk about why the price has rises and falls in share market, actually it's because of the market behavior. If there are more people buying than selling, the price will rise. And if there are more sellers than buyers, and the price will fall. So actually, price is kind of performance of demand-supply relationship. So if we want to know whether there are some big funds buying your share, you can see this indicator. It's called MCD. And the red color is bankers. If bankers increasing, which means your share is full of energy to be upward. And now we can see here it's a high proportion recently, but the proportion of red color of bankers actually is smaller than the previous. So is here strong? No, right? This green to red doesn't very strong because bankers is less than the previous high point. So if you want to enter here, you can make a preparation that you may cannot make much money, or even you do not make money, but if you see green color, then you should exit. So this is about how to judge the strength of the share. So actually, our transaction in the market is an exam. You can see whether you consider these 7 points, whether you have some transaction standards. You know when to buy, when to sell. You have an accurate point. Just for example, green to red, red to green of trade expert. Just at this point, you enter or exit. And the second is split trading, which means we in share market we don't just have all buy or all sell. You can choose to take your positions apart. You can trade, for example, you can trade one third or 1/4, just like that. And periodic judgment. For example, just like we mentioned, if we do short term, we can choose 30 minutes. Of course, you can also choose a period you like, and how you find your suitable period. You need to judge by yourself. And the fourth is risk control. And fifth is stress analysis. For example, how can I know whether the share is strong or not? We just mentioned we can use an indicator to see whether there are enough bankers in your shares. This is one method. And the sixth one is hot topic chasing. I know many people, they like to chase some hot topics, like some hot news. And whether you can always find the right subject, the right hot spot in the market. This is also one aspect of this exam. If you read news, you always read news. And the seventh point is stop profits and stop loss. So you can see in this exam how many points did you score. And the fourth part is about 0208 green tech. Can we still hold it? This part is what I will share next time. That's all for today, and this is Homely Cha. Our investment philosophy is index first, stock next, long-term first, short-term next. Operator familiar. If you like this video and then you want to see more video, please subscribe Homely Chat Malaysia. Thank you.